ECB easing. For IDA Global, the case for a cut in ECB interest rates is pretty clear. Inflation is low at 0.7% and likely to undershoot the ECB's price stability target next year. Some short-term inflation expectation measures are coming down. Wage settlements are falling. The euro is strong. And against this backdrop, the ECB really should cut. The problem is that the ECB needs to find an overwhelming consensus on the 23-person board. This makes it a close call in terms of tomorrow's meeting. We would suspect that the ECB face probably a 30 to 40% probability of cutting tomorrow versus market expectations of 15 to 20%. What would happen if we get a cut? I think the first question you have to ask is what size of refi cut we would see. It's not given that it will be 25 basis points. That is the norm, it is the standard. But the ECB could consider the following option. It could cut by 20 basis points to 0.3, which would leave the door open for them to undertake one final cut at a later date, down to 10 basis points. Such a move might initially disappoint the market, but when we see on a lasting basis what the ECB is trying to do in terms of its longer term aggressiveness, then we could see more of a lasting reaction. Eurodollar looks quite tricky at the moment given these issues, but also the whole debate about not only the employment report but what Yellen will say next week. The base that we found at 134.50 means that we look at to be in a choppy sideways range at the present moment in time, which is likely to be resolved really at the end of the day until we see what Yellen's got to say in front of the Senate congressional hearings on the 14th of November. This is Mike Gallagher from IDA Global.